Could you 20x your money by investing in Shift4, or will the company go bust now that Jared Isaacman has left? Welcome to How to Invest. In today's video, we're answering that question. Shift4 is a payments processing company. They have a multitude of products, from their unified commerce platform, which helps process e-commerce online stores payments. They have SkyTab and SkyTab Venue for restaurants and for venues respectively. And then lastly, they have crypto payments and charity payments as well. First, let's talk about Jared Isaacman leaving as the CEO. I think this has very little long-term effect on the company. He is still the #1 shareholder, and so his incentives of the company succeeding are still very much in line with the shareholders. He is also still a board member, and I believe if the new CEO, which he trained himself, somehow starts to fail in that position, he's going to get very much involved again, potentially will remove that CEO, take the position again. Though I think the probability of that happening is very low. The new CEO seems very competent himself, and like I mentioned, was trained by Jared Isaacman himself. So overall, I think there is a low risk from the change in management. Shift4 is a very, very fast growing company. In fact, they've grown revenue by about 50% year over year for the past 3 years. As a long-term growth investor, this is the perfect type of company for me. And if you're a long-term investor as well, it should definitely spike your interest. Now that we've looked at past growth, let's look towards their future growth. Their main vector for future growth is through M&A, mergers and acquisitions. And I don't think there's a company on earth that does M&A better than Shift4. This is something that can be very, very dangerous. So when you do mergers and acquisitions, what you end up, a danger of that is that you could potentially end up with a lot of duplicates. So you have an accounting department, the company you buy has an accounting department, and so now you have two departments that are both doing the same thing basically. Now, Shift4 is really, really good at buying companies and then integrating them into their company. They delete redundant parts, they integrate their products into their own products, so you don't just end up with this huge mess of products. What you end up doing is just creating one product that slowly becomes better and better, that has more and more features, basically the way that Google has. Google Cloud has a ton of products. They have chat, they have Drive, they have Gmail. Whenever a new company starts up, say Slack for example, and they come out with a bunch of new features, basically Google creates their own version of Slack, Google Chat, and then they integrate that into their one product, and it just creates a super, super compelling offering. Shift4 does that same kind of product growth, but through a slightly different way. Instead of creating the knockoff version of whatever the most popular product is in that kind of software vertical, Shift4 actually buys the company, the best company that is creating the product in that vertical, and then they actually integrate it into their own product, which just continues to make their unified product offering more and more compelling. On top of getting new products through M&A, they also are able to expand in new markets through M&A. So their main strategy for growing internationally is through M&A. So instead of creating a new department in that country, they just buy a company that's already set up already has local experts, and they integrate that company into their own, and now they can offer all their current products and potentially any new products from the company that they just purchased in that new market as well. The last great growth thing that happens through M&A, on top of getting the new products and the new market, is you get tons of new customers. New customer acquisition is very, very difficult, especially when you're trying to sell to, very, very old companies that are very happy with their current vendors. It's almost impossible to get a relationship with them. But if you can buy the company that has the relationship with that customer, you can actually cross-sell them all of your other products as well. So if I was to describe their growth strategy in a short summary, it would be buy new businesses, delete excess parts, integrate teams, integrate the product, do this all as fast as possible, and make it as seamless as possible for the new customers and existing customers. In the immediate future, they are actually in the process of buying a company called Global Blue. And this is a great case study into exactly how Shift4 goes about their M&A growth. So they are buying Global Blue for $2.5 billion. And Global Blue is the #1 VAT tax refund company. They actually have over 80% of the VAT tax refund service market share. So instead of Shift4 spinning up their own VAT refund product and trying to grow in the market themselves and competing with the #1 company in the space, they've just purchased the company instead. This adds new products, so now they can do VAT tax refunds. It opens up a ton of new potential customers. So Global Blue has relationships with a lot of luxury European brands, and now Shift4 has an immediate relationship with all of them because of the relationship they purchased when they purchased Global Blue. On top of the VAT refund, they also have currency conversion. So these are both new products to the Shift4 ecosystem that instead of Shift4 having to develop these products themselves, Shift4 was just able to buy a company that was the best in the space and just integrate their versions of the products into their own. Through all of these new markets, products, and customers, this Global Blue acquisition, Shift4 management says, has added over $80 million in revenue of synergies. So I just think this Global Blue acquisition is just a perfect case study in exactly how Shift4 operates and how they continue and will continue to grow far into the future, into new markets, into new products, and to continue to acquire more and more customers around the world. Now that we have a better understanding of this company, their future growth, and just how management operates in general, let's talk about the management's guidance for growth. Management's bear case for the next 3 years was high teens revenue and EBITDA growth. Their base case for the next 3 years was revenue and EBITDA growth of 25% plus, and their bull case for the next 3 years, which they were actually saying is the most likely case, is 30% plus growth in revenue and EBITDA margins. So as you can see, the management is very, very confident in their ability to continue growing very, very aggressively. Now, lastly, let's talk about how to invest, our internal modeling for this company. Based on our internal modeling, which takes into account guidance from management and our own estimates on how it will continue to grow past that. So in the 5-year, we believe that Shift4 could be a 3x ROI, and that's compared to the S&P 500 of a 1.6x in the next 5 years, assuming a 10% compounded annual growth rate. We think that Shift4 could potentially 6.5x in 10 years compared to the S&P's 2.6x over 10 years. And Shift4 could be a 20x in 20 years. Again, compared to an S&P 500 6.8x over the same time period. So assuming the S&P 500 has a 10% annual growth rate, a 16% annual growth rate for Shift4, which would be a 20x over 20 years, would be a far outperformance by Shift4, and we think this is very, very possible. We think that the Shift4 management is very, very capable. Thank you very much for watching. I hope that you learned a ton. This is not financial advice, and if you want to watch me actually go through and do all this research yourself, you can watch part 1 of my deep dive here. And if you want to watch our deep dive on some stocks that we think might even have better returns than Shift4, then you can watch this video here.